I believe that because of the accumulated debt and deficit, particularly off-balance sheet debt, entitlements, and the unfunded entitlement liabilities, that the purchasing power of the U.S. dollar over the next 10 years is going to decline by 75%. If that is more or less right, then the gold price goes up fourfold from here.
So you made the comment that you think we're heading into a very important precious metals bull market. So I'm going to pin you down. Since we just went from 1,800 to 3,300, what do you see that excites you about the next 5 years as opposed to the past 3?
You got to give me the next 10, not 5.
Okay.
I believe that the analog to the deterioration of the purchasing power of the U.S. dollar that we're going to experience is the 1970s. In the 1970s, according to the Office of Management and Budget, the U.S. dollar lost 75% of its purchasing power. This is not some old fat libertarian, Rick Rule, saying this. This is the office, the Congressional Budget Office. I believe that because of the accumulated debt and deficit, particularly off-balance sheet debt, entitlements, and the unfunded entitlement liabilities, that the purchasing power of the U.S. dollar over the next 10 years is going to decline by 75% again. I don't know how it'll be reflected in the gold price, but the easiest thing for me to say arithmetically is that the increase in the gold price will mirror the deterioration of the purchasing power of the U.S. dollar. If that is more or less right, then the gold price goes up fourfold from here. People say to me, Rick, give your head a shake. Gold has already gone. It's already up 40%. If the analog is the decade of the 70s, let's assume that the move in gold price from $35 to $100 was a dead cat bounce off the restriction of the gold price. And let's say that the move in the gold price above 550 to 850 was morons piling on. That move from 100 to 600, six-fold move, is a pretty good move. And if the cause of it is the perception of the deterioration in the purchasing power of the U.S. dollar, I think it's absolutely right to assume that the increase in the gold price, the increase in the nominal gold price, could reflect the deterioration in the purchasing power of the U.S. dollar. So
do you think that the scenario for the U.S. dollar in the 70s was mostly motivated by inflation, or?
It was motivated by a negative real interest rate.
Okay.
We fought, well, you didn't. Well, you were alive then. We fought the war in Vietnam, which we lost. And we fought the war on poverty, which we lost. And the highest marginal tax rate in the United States then, before weird deductions, was 80%, so we couldn't raise taxes. We had to deal with these social obligations. We did it not by changing the nominal value of our obligations, but really by changing the purchasing power of the dollar. The second thing that happened is that the way that the fear of inflation was expressed in the market, or put differently, the experience that consumers had with inflation juxtaposed to the rate that they got on their savings, meant that interest rates were sharply negative. We had a 10% measured rate of inflation. We measured it, of course, differently then. And people were getting paid 5.5% on their savings accounts. Well, that was reflected pretty clearly by a change in asset allocation from cash and cash equivalents or long-term bonds to gold. We have a circumstance today, Trey, where if your listeners believe in the CPI, they're pretty sanguine. You get a 4.5% yield in the U.S. 10-year Treasury. In a currency where your purchasing power is deteriorating by 2.5%, you're getting a 200 basis point real yield. I believe that's ridiculous. The CPI is not a good measure of the deterioration of the purchasing power of your savings. For one thing, the CPI doesn't include tax. Do you pay tax, Trey?
A little bit.
Yeah. If you look back at the basket of goods and services that the Reich family consumes, say, I don't want to test your memory and go too far back, but 2020 to today, gasoline prices, up 2.5% compounded? Hardly. Mortgage rates, doubled. Groceries are a political issue, up 60%. And they're telling you that a deterioration of the purchasing power of the U.S. dollar is happening at the rate of 2.5% a year? I mean, what they're smoking is not legal to transport state to state to state. I believe
my favorite CPI stat is they measure the cost of health insurance. Have you heard this one?
It's down
by the retained earnings of the insurance companies. That's literally, when you look it up, it says we calculate the cost of health insurance by measuring the retained earnings of the insurance companies. And you're like,
these guys should sell penny stocks.
And I don't know if you know this, but the cost of health insurance is actually declining, over the last several years, according to that metric, to their metric, which I think is pretty incredible.
Yeah, let's compound the losses and call this again in the CPI.
Anyway.
I've been writing and speaking about gold ever since. I bought my first gold in 2001, never sold an ounce. Added to that in 2018, never sold an ounce. And I believe gold has real long-term value, and has been proven right. I mean, it started at 250, it's gone up over 15 times in the last 25 years. So, yeah, I consider myself someone that's well-informed when it comes to the subject of gold. And I can talk about it at all levels, and I study it day and night.
So, in a nutshell, the thesis is the dollar is going to...
Yeah, my first article in 2001 was titled, really cute, Tarnished Dollar Will Put a Shine on Gold. That was the title I put to it. And it was really making a case that the dollar versus gold, the dollar was going to go down and gold was going to go up versus the dollar. And I gave all of the economic reasons, the monetary reasons why that was going to happen. It had to do with trade deficits.
Triffin dilemma.
It had to do with the Fed becoming more accommodative to fixing every crisis with easy money. It started with Greenspan and then became worse and worse and worse with Bernanke and Yellen, all the way through. Each Fed chair became worse than the one previous in terms of allowing basically this moral hazard to create as much debt as you want, because the Fed will always bail you out. That was always, and I saw that coming, and especially after 2008, and I predicted money printing when the crash happened. I said, this time they're going to do money printing, and they ended up calling it QE, which was a really cute name. And my thesis is that we are in a macroeconomic environment where we're going to go back to QE, and there are a number of reasons for that. And my theory is why eventually, whether it's this year or next year or the year after, we're going back to QE. And this time, it's going to be devastating.
So I have been working on gold for about the same period, and I think you and I share many of the same theses about gold, but I think you will agree, I'm a bit surprised that the system has actually held together as long as it has. Like, I would have told you 15 years ago, the dollar's finished, it's over, Triffin dilemma, the whole bit. But it is amazing how much, when the system has invested in a dollar standard system, or
it's a global system. It takes a while to unwind a global reserve currency. It doesn't happen overnight.
Right, and there's so many people who are invested in the dollar standard system. It's taken. It's created wealth inequality between the U.S. and many other nations, because the U.S. has been able to export its inflation to other countries because of a strong dollar, and lower its inflation because it can import goods with a strong currency. So it served its purpose for the U.S. It hasn't done a lot of good for a lot of other countries, and they're finally starting to revolt. And that's why you're getting the BRICS movement. And BRICS is now 11 countries with 44 applicants and 120 observing countries, and half the world's population,
and almost half the GDP. And so we're going into a bifurcated world where there are going to be two systems for at least a while, until we get a real global monetary system reset like Bretton Woods was after World War II. But I don't think that the world is ready for agreeing to a one system. I think you might need a conflict with that before that happens. Sadly, sad to say, because that's the way these things end up correcting themselves, is usually through conflict throughout history. So what I'm focused on is what's going to happen in the medium term. until we get this new reset down the road. And it's already happening. There's a an exact mirror system to the Western financial system being created by China and the BRICS. And everything from pay, settlement, depository, insurance, rating alliances, currency swap arrangements, a new development bank, which is going to mirror the World Bank. They're creating an exact mirror system that exists outside of the US dollar system. And that's the future. And that's where all these BRICS countries are coming together. And the U.S. doesn't like it. You've seen Trump threaten twice now that if anybody creates any anti-American policies, whatever that means, he's going to punish with tariffs. And that, to me, is a sign of desperation. When you have to threaten people to use your currency, that's you've lost your privilege to be a reserve currency.
So over the years, I've always told my investors, there are the right reasons gold goes up and the less right reasons.
Yeah.
There's no wrong reasons, but geopolitics, October 7th, a couple of years ago, I mean, those are all
They're flashes in the pan.
But my point is that for all these years that we've been following this, I think it's actually happening, what we've been planning for, what we've been anticipating.
The macro
is
trend.
finally starting to happen. Do you agree with that?
100%.
We're hitting the tipping point.
We're absolutely. So when you speak, usually there's a geopolitical flare-up and gold has a run-up, but that's very short-lived.
Right.
What's been driving this longer-term trend that started in 2001, well, actually started in 1971, but is really more about lack of faith in the dollar, fear of the dollar being weaponized. I think that would the Ukraine
the Russian
war,
freeze.
the Russian freeze really woke up a lot of countries around the world. China, who had one of the second largest treasury holdings in the world. They saw the writing on the wall, and they've been de-dollarizing at a very steady pace. They're down from 1.1 trillion to 750 billion. Japan, which was always the most steadfast buyer of U.S. treasuries, actually sold some for the first time, 50 billion in the third quarter or fourth quarter, and for their own reasons. Theirs is more about their own policies coming home to roost now and having to sell their dollars to support the yen. But yeah, this macro trend is definitely in place because the world, there are two concerns. One is the sanctions and the fear of sanctions, and the other is the fiscal state of America. There's no will, and we've seen it, whether, I don't care if you're a Republican or a Democrat, they both have increased deficits by equal amounts. No one is interested in really addressing the deficit problem, and we're heading towards a cliff. And the numbers are so large now and growing at such with large deficits every year, like plus $2 trillion every year is the norm now. And as far as the eye can see, and then you have the $100 trillion of unfunded liability sitting there that no one seems to want to talk about. And you have a recipe for a financial currency crisis. And I see that will happen. How it manifests itself could be a geopolitical event.
That was going to be one of my questions. How is it going to resolve itself? You mentioned currency crisis, war.
Well, the currency crisis is either going to be triggered by a geopolitical event, the failure of a financial institution, or a failed treasury auction, a real failed treasury auction where there are no buyers. And then the Fed has to, as always, step in and monetize that debt. And that is absolutely, as far as I can see, there's no way you're going to avoid that. And, especially if Trump gets his way and tries to lower rates down to 1% with his next Fed chief, he's going to hire someone who's going to do exactly what he wants done. And he's very good at doing that, getting people to do exactly what he wants done. He's very persuasive. And I think the next Fed chair will do as he's instructed. There will be no separation between government and the Federal Reserve. And if he gets those rates down to 1%, what does that mean in terms of, certainly it may fuel a rush to equities and assets and whatever, but ultimately it's going to lead to a complete destruction of the dollar. And you're going to get inflation. And then if the foreign buyers and even the domestic buyers of U.S. Treasuries start to get spooked, that's when the spiral really comes into place, and it can happen very quickly. And so what would the U.S. do in a U.S. dollar crisis? It could be nasty.
So you think the dollar will be replaced or play a lower role?
I don't think it'll be replaced in any. I think you're going to get competition in terms of a trade currency, which is different than a reserve currency, okay? The role of a reserve currency is very different trade. So what's happening now, and it's happening again, led by China, including the BRICS and a number of other players, they're creating a payment system that uses central bank digital currencies completely outside the US dollar system with gold. In my opinion, this is my theory, it's been my theory for 5 years, that gold is going to play a role. And the most obvious role that I see is that if you have bilateral trade between two countries using their local currencies, defined as central bank digital currencies, and they're trading and there's a surplus, country has a surplus, let's say Saudi Arabia and China, and Saudi Arabia ends up with a bunch of unwanted yuans. Everybody always told me that the reason that wouldn't work is because what are these countries going to do with those unwanted currency that's not a global reserve currency like the dollar, it's not as liquid, etc. Well, the answer is gold, and that's why all the same countries that are participating in these what's called the Enbridge project, which China started, are all the countries that are buying gold in huge amounts. And then more recently, China announced that you are now able to exchange your yuans and the Shanghai Gold Exchange for gold. They created a warehouse in Hong Kong, the first, will be many around the world, where the physical gold will be stored and you can take delivery. So if you have a bunch of unwanted yuan between, you just go and exchange your yuan for gold. That's why China, as I've believed for years, and I've said for years, has a lot more gold than they've officially reported. They've officially reported 2,200 tons. I've been saying they had a lot more for years because you just watched the physical flows into that region, and the numbers didn't make sense. And that Goldman Sachs recently came out and confirmed that, saying they probably have up to 10 times more gold than they've disclosed, and that's what I've been saying for about 5-6 years now. And I think that gold, when they determine that there's a need to disclose how much gold they have, there's a purpose, they finish accumulating because they're still buying, then you'll know what the number is, but not yet. Saudi Arabia, same thing. They've been buying gold. They never report anything officially, but we see the physical flows into Saudi Arabia, and there's been massive flows. They don't report a thing. The last time they reported was 2015.
Do they even report their central bank reserves?
Well, they did the last time, 2015. But a lot more gold has flowed there in the meantime.
Interesting.
Yeah.
So as this monetary regime, which I think we would all agree is already evolving, the stepwise nature of the BRICS, et cetera, dollars down from 72% of reserves to 57 or whatever.
58, I think, yeah.
Yeah, 58. What do you think gold will play an official role in the monetary system?
It already is. It's a tier. Basel III, which is the Bank of International Settlements, the central bank of central banks, created Basel III rules, which made gold a tier 1 asset. What does that mean? It's the equivalent of cash. It's a zero risk asset. And now that's going to be adopted by all the commercial banks. July 1st was the supposed date when that all happened with commercial banks in the U.S. And so gold is now money. It was always money. We just have been trained to think it's only not been money for the last 50 years. It was always money before that, and it's going to be money again. So it's now replaced the euro as the number 2 reserve holding under the dollar in all central banks around the world. It surpassed the euro. So it's to me, gold today is more valuable than U.S. Treasuries.
If you're looking for a simple, secure way to invest and own physical gold and silver, visit our sister company, Hard Assets Alliance, at hardassetsalliance.com. That's hardassetsalliance.com.
So there was an interesting part yesterday where each of the panelists were asked, where do you think the gold price is going? And I thought Grant Williams, did the best when he said, look, if central banks are buying gold, everyone in this room should be. But in terms of the next, year, 5 years, what's your outlook on the gold price and why?
We publicly go on record with price predictions from time to time. And last year, I remember at our annual meeting, the co-founder of Seabridge, Jim Anthony, stood up and he and I agreed that we'll be seeing gold above $3,000 in less than a year, which we obviously have. We just had our annual meeting last week in Toronto. Jim made another presentation, and our view is that within a year, gold should be at 5,000. But over the next 3 to 5 years, we expect gold to be at $12,000 an ounce or higher because of gold now entering in the global financial system in a meaningful way. Central banks buying it, and the West not yet into the gold space.
12,000 is a big number. What are the components of your bullishness?
It's gold's role in the global financial system. You know, after we shut the gold window in 1971, if you look at the amount of debt that's been created, the money supply growth, there's just a lot of crap out there that's not supported by anything. And if you look at the value of gold today, it's worth maybe $20 trillion. That dwarfs what's out there in terms of global credit, money supply, and all that. So just to come back in to support the global financial system, gold price has to go higher. It's math.
And you don't think Bitcoin's going to displace gold anytime soon, say in central bank vaults? Or
I don't think so. I mean, you know, central banks have had a chance to sell treasuries and buy Bitcoin. I don't see any one of them doing it. To me, you know, it's interesting. There's some smart guys I know that recommends both gold and Bitcoin. I think they are completely different investment opportunities. One is a risk-on asset, one is a risk-off asset. So at the margin, they probably compete with each other, but gold is different.
Yep, and it's the central banks certainly own a lot of it. And they don't own a lot of silver either, right? No. I mean, silver is not really a monetary metal. Wouldn't you agree? Or
yeah. So I was when I was younger in my career, I was actually working at Phillip Brothers when the Hunt brothers tried to corner the silver market. And you know, back then, silver was a monetary metal. At least they believed it was. Silver has too many industrial applications now to really make it a monetary metal. And that's why I think people that are focusing on the gold-silver ratio just don't understand that it's not the same as it was 20, 30, 40 years ago.
So at this conference, I've actually noted, I've never heard people more bullish about gold. Nobody's talking about copper. Very few people are really talking about silver. It's, you know, everyone thinks gold's going to 5,000 now. It's a layup, which has me a bit worried. But nonetheless, this is an exciting interview for us because Aya Gold and Silver is basically a silver company and very high percentage. So tell us about sort of your mission and your project and what Aya represents, because I think it's one of the purest silver plays out there.
It's the purest silver play out there for sure. We are 100% silver, so there's no byproduct, there's no copper, no lead,
which
no
is
zinc.
in itself very rare.
It's only in Morocco. I've only seen this in Morocco. I'm told that there are other mines like that in Russia or China. I've never seen it. There's nothing like this in Mexico. It's pure native silver. Like we have, you know, when we open up some faces, sometimes like there is like a curtain of silver. Like it's unbelievable. We get thousands of grams per ton. So we are a pure silver company. 100% of our revenue for the coming 4 years is going to be silver, pure silver. And I think that what you mentioned, that here is a gold conference, but it's a silver gold conference. People are looking at the gold space right now and they're enthusiastic because gold has done extremely well. But when you look at why it's done well, it's the central banks have been buying.
Right.
But hence the ratio of gold to silver has gone out of whack because the central banks
got up to 105.
That's right.
Was the peak. The gold-silver ratio, which has averaged about 85 for the last 10 years or so, and the further you go back, the number goes down because gold or silver used to be a monetary metal. So I'm just explaining for those who are watching. So now that silver is not a monetary metal, it's unlikely to go back to numbers like 60 and that type of thing, but 105 was pretty out of whack.
It was totally out of whack, and now silver is an energy metal for solar. It's a military metal for armament, for computers, for trackers, for, I mean, it's the best metal that they put into electronics. So the demand for silver is industrial. It's extremely strong. It's not financial now. Maybe it will come back, but it's not at the moment. So yes, so the ratio was a little bit out of whack. But I believe that, sure, gold will go from 3,400 to 5, but silver will go from 36 to 80. And the leverage on the change is a lot greater. So the silver companies like us are going to do extremely well on the appreciation of the silver price. We'll do well on the gold price. But look, everybody's doing well. Let's be honest. I mean, if you look at the cash flow generated by the majors, the intermediate producers, the cash flows are unbelievable. And because the costs are where they should be, but the selling price is fantastic. So we are a pure silver company right now, but our second project, which is always on that same belt but closer to the heat source, so closer to the mouth of the volcano, has got gold, silver, lead, and zinc. Whereas the first project is further away, so it's at the end of the sequence, and at the end of the sequence, it's a pure silver play. So it's just a matter of where you are in the sequence of the metal. So we have, very unique silver mine, but the second project, which is going to be about 4 times bigger than the first project.
And what's the timing of development?
We'll be in construction in, I would say, 2.5 years, and then add another.
The construction decision has been made?
With the PEA/pre-fees is being completed.
Okay.
Back of the envelope, of course, it's being made because with the metal price, everything works, and so we will make an official publication in October of what it is, and then we're going to get into feasibility study and finalizing the fine print. But look,
and you'll need a partner.
No, we will not need a partner. We have the strength and the financial strength to do it ourselves. It's going to be a $500-600 million capex.
Oh, I see.
The bank is already there for 60%. Our current banker, EBRD, is our financial partner. They're very happy with their first facility on Zgounder, our first mine. They'll give us 60% on the second mine. The government of Morocco, they have their investment program where they fund you. They give you a grant, so we'll qualify for 20% grant. So they'll give us $100 million.
Wow!
And then we have to put up 100 or 150 million, which we will have in the bank. Plus, you see the off-takers. We saw this morning Ivanhoe announcing an off-take agreement with Trafi, and they put 200 million just to sign the off-take agreement. So we will be in a position to have a beautiful off-take agreement on gold, silver, lead, and zinc. So the funding is kind of, the structuring is kind of done. It's not completed because we don't have the feasibility to give them, but kind of what it's going to look like is done. We already have the permit. It's a mining permit already because it was an historical mine. So we have the mining permit. So now it's for us to execute on the PA, feasibility, beginning of construction, and get ready for production in 3.5-4 years time, and then we're going to shift, because then we won't be just silver. We're going to be mainly silver, but we'll have some gold and we'll have lead and zinc.
So I'm sure you know Andy Schechtman at Miles Franklin. He's sort of a gold chartist, etc., and he has this whip theory, horse whip theory, that silver, when the whip goes with a rising price, gold goes first, and then silver's the back of the whip, and when it starts to move, it moves faster. And I think silver's 36 today, and that's right on the cusp of that type, like a pretty serious breakout, isn't it?
It is, and we see it because we sell the metal, and every day in the silver market, we trade 1 year of production every day. The leverage is 360 to 1. Every day in paper silver, you've got 1 year of production that trades completely.
1 year of the entire industry?
Of the entire industry.
Production
every
trades,
day.
Every day.
Every day. When we put the metal for sale, we sell metal, we don't sell paper.
Right.
It's like a little Pac-Man. The bid climbs up and grabs it. So we can sell about $1 a bit more higher than the spot price.
Oh, that's interesting.
Because we sell the metal.
But it hasn't always been that way. It's just the past 4 months or
maybe a year. You can see it. It's very interesting. So at one point, it's going to break. Like your theory of the whip, it's going to break. And as you know, when it breaks, it accelerates.
Right.
So we remember gold in 2008 to 2011. We did the funding of Semifo of Mana at $600 gold, and we thought that was crazy because we did the others at $300 gold, and then it went 6, 7, 8, 9, 10. 1001, 1009.
1900.
Like, yes, it went very, very quick. And it will be the same again for silver. I don't know when it starts, but when it goes, it's going to go. And then people also, I believe at that time, are going to come in for the financial value of the metal, which they're not doing right now. But a lot of people we're seeing at the Rick Rule conference are telling me that they're buying silver.
Right.
Our buyer of silver is in Geneva, and the spot price was 34, and he was bidding us 42.
Wow.
So there was no inventory coming. And the hockey stick had started, and they were calling that morning and said, we need silver, we're short, we need silver.
When was this again?
And that was about 2 years ago, when there was
with the big...
the first move to 34. And last year in November, before the American election, there was also another move to 34 and a very quick move to 34, and the market got very, very excited. And look, I did not see supply coming back in, inventory coming back in. So maybe it wasn't enough, and people are waiting for 40, 41, 42 to do exactly what they've done. But we haven't seen that yet. And we get called every week from India, the Middle East, China. Can we buy your silver? Can we buy your
Unsolicited.
silver? Unsolicited. Last year, we got a call from the Middle East, and he said, I'd like to buy all your silver, and I'm willing to sign a 10-year contract. and I said, sure, but we're selling it at spot. He says, oh, no, I don't want to negotiate price. It'll be spot, but I just want to have a commitment you're going to sell it to us. And I said, okay, but what's in it for us? He says, I'll buy 10% of your company in the market. If you want to commit to a 10-year contract. I said, no, because look, people are going to see that like we're committing, and people will, the interpretation will be, why did they do this? You don't need to. So we didn't do it. And we don't have a contract. We're selling spot. Every week we sell 100,000 ounces every week, approximately, every week. Spot.
It sounds like a good market.
It's a good market. So I don't know about the point on inventory, but we have not seen it coming back in. And we know that production in around the world is coming down. Production is coming down slowly in South America. Production is coming down around the world. So people are seeing this. And the solar panel company need the silver. They need it bad. They tried to replace it. It didn't work. So it's not true that they're not going to be using that anymore. And if the Japanese come through with their battery made of silver, which they've been announcing, though there's a slowdown in the EV market at the moment, it's not worldwide. I mean, in Europe it's continuing, in Asia it's continuing. I don't know if you've seen the recent cars made in China that are all electric. I mean, they are unbelievable. And if it's true that they have now progressed the technology on a silver battery, there you go. So it's to be seen, but look, at 36, extremely profitable right now. Right. So anything marginal is even better. And there's no new silver mines. They're very rare. If you look even here, what's to be built? Very little. Very little. And not, anyway, not for me, not interesting if it's in Mexico.
You've always, I've always looked at you as excellent input on silver and fundamentals, but now that you're in the gold world, do you spend much time on sort of the macro and the factors driving gold up here to 3,300 and whether that's likely to continue?
I believe so, for certain. I started my career in 1977 in the gold space. It was $140 an ounce. We're up 20 times more. So gold has been able to really reward me by staying consistent. And I continue to move forward. I mean, one of the drivers we know right now for price is central banks, right? The central banks are buying it. And the other component that people sometimes forget about is gold's industrial use. We always talk about silver having its major industrial uses because it's the best electrical conductor. It's used in a wide variety of applications in that regard. But when you look last year, almost 10% of gold consumed was in electronics, because it can be used in those really small capacitors, whether they're in your cell phones or your iPads. they're going to be what's helped generating AI. When you think about the server farms all over the world, there's gold within those connections because they allow those capacitors to move the signal without oxidizing, right? And so we're going to continue to have gold utilized in that regard. And I think this aspect of safe haven, as we continue to see governments around the world adding on debt, we know that ultimately that has to be looked at, and I think gold is a great hedge personally against it. So I own not only equity, but I have for many years owned physical gold and continue to have it, and oftentimes will translate into either coins or bars in that regard. So from a macro perspective, that I think it's safe for everyone to have at least exposure to gold. And we look at it from invested capital right now from many large funds around the world, they don't have the exposure to gold that they probably should. So we only need a small incremental movement of some of these major funds, as you'd be more familiar than I am, into the gold space, which would be both good for equities, but more importantly for the gold price itself.
And flipping this on its head, do you have any views on the dollar and how that's going to shake out over the next couple of years?
I think there could be challenges with the with the strength of the dollar, because it has been this reserve currency that everyone will go to because of its pricing in oil. I'm not a macro individual, I'm a geologist, and so often what I say will be things that I would hear. But when you look again at central banks buying gold and perhaps moving and translating some of their holdings in the US dollar into gold, or what we're seeing with the BRIC countries, there's this conversation around other groups of countries trying to get back to a gold standard so that there's value underpinning fiat currencies. It's a reason why I continue to hold gold as a large part of my portfolio for all of these reasons that I, get from you by reading your data and others, right? I get your newsletter and read it. I'm a subscriber. Yeah. And so, you're the thoughtful ones in the room, and therefore I just look and say, I like that thesis, and for that reason I'll do it. Because the one thing that's rare, it's very difficult to find new gold mines. I found that. Bruce Jack was a great mine we were able to find. This project we found in South Dakota, we are finding them, but finding the large gold mines to replace the reserves that the miners need, and particularly the demand for gold, is going to be challenging. And so that means a higher price because unit operating costs go up. If you look at gold mines right now, the producers, their average ASCII cost, all-in sustaining cost, is in that $1,500 to $1,600 range, which is why our project at 1,050 is very attractive. But 20 years ago, when we'd be talking, ASCII costs again would have been down at $200. So we've seen those increase 6- and 7-fold over the last kind of 10 to 15 years, and so inflation is going to continue to drive those up, put the price up. And the one thing we have seen with miners is good discipline coming in to make sure that their costs are down, and so as a result of that, inflation will have an impact. And jurisdiction. People are going further afield to be able to find projects. And as governments in foreign jurisdictions look for raising capital, one of the easiest way to do it, the mine is there. You can't move the geology. And so we often see that, right, wherever governments may put on additional taxation in order to be able to benefit from mining projects. So having a project in South Dakota, rule of law, know what your tax structures are, is certainly beneficial for our shareholders, and a reason why I'm going to continue to be involved in this investment.
Which brings us to the present day Osisko Development.
Yeah.
So can you tell us a little bit about
So Osisko Development was my focus. I stepped out of the royalty company after 10 years to run Osisko Development, to go back to my roots, which is basically project and mine development. We started this project back in 2015. We got involved. Right now we just published an updated feasibility study. Phase 1 of this project is going to produce about 200,000 ounces.
Is it a one project company or
two?
Two.
But the project in Caribou in British Columbia is quite large. The property size is about 50 miles in the trend, so we think this thing's going to end up with 5 or 6 mines on the trend. And it's the same size as the entire Val-d'Or mining camp. This thing started out in 1858 as a discovery. We got control of it and we re-drilled it. We put 750,000 meters of new drilling in it since we got there. So we put 2 million ounces in reserves.
Did you buy it? You bought it?
We did, yeah.
From another company?
Essentially from Eric Sprott. Eric brought me in there in 2015 after he took it over because he owned the debt on it, and the guys that were running it went
So he owned it personally?
down. He owned it personally.
Interesting.
He brought me in to try and figure it out. And after about a year of drilling it, I said, Eric, this is an expert level project. I'm going to need to take over 100%, and we're going to need to figure out this thing out. We're going to have to do some real science on it. So I brought in my PhD geologist, and we spent about 2 years just working on the geological model.
When did you acquire it from Eric?
2015, I got involved, and Eric left in 2019.
Interesting. So
I gave him a check for $85 million, and he went off to Australia to do a little project down there. So.
But like so many other mines, when people hear about it, it's always like, recent success, but you've been doing this for a decade there.
Yeah, I'm 10 years into this one. We cracked the code on the geology 2019. We had the aha moment, and we drilled. We put 18 drills on it, doing what a Cisco does, which we call the SUDS program, which stands for Shut Up and Drill, Stupid. Drill first, ask for directions later. So we figured it out, and we wanted to get the permitting cycle underway, so we applied for the EA certificate in 2019. We got the EA in 2023, and I got the full mining permit in 2019. So that's the big catalyst I like to focus on today, is that we are one of the two fully permitted mines in Canada right now, and one of 10 maybe in the world that are shovel ready and permitted. And the other one in Canada is Seabridge, which is a $6.4 billion capex, so a very different style project. This is $650 million US to build a 200,000 ounce a year mine that we think is quite scalable onto 400,000 to 600,000 ounces a year. So the reason I'm not on my cottage driving my boat around in circles is because I do think this one could be as big as Canadian Malartic. We've got the tools to figure it out. We've got the geology. We understand the deposit now, and it's a matter of drilling. We wanted to get going, so we got a permit for 4,950 tons a day, which kept us out of the Canadian federal permitting process. So in 4 years, 10 months, we achieved full permitting. So that's pretty important in this sector. Now I'm just in the process of finishing up our project financing, which I hope is done in weeks, not months. And we're actually under construction as we speak. I have about almost 4,000 feet of underground development, 1,200 meters.
So we're past the production decision, and we're in construction?
In theory, we haven't done the final investment decision, but we're opening up the ore body by getting underground as a confidence builder. So that 1,200 meters will be usable in the actual production. But the final investment decision will be in the fall of 2025. So we're in motion.
Will you need a partner, or are you going to do it yourself?
We're going to do this one ourselves. We've looked at partnerships, and I tried it at Canadian Malartic and ended up building it myself, and it went quite well. We started that project back in 2003. I bought the deposit for $80,000. We sold it for $4.1 billion in 2014. We raised the money all ourselves. We found it, we built it, and we operated it. And then we got into a bit of a dust up with our friends from Goldcorp, and we got white knighted by Yamana and Agnico, and that mine is now, the Detour and Canadian Malartic now make up more than half the value of Agnico. So we're pretty proud of that legacy. As we go forward, it's a pretty neat place to start from. We think that this project, Caribou Gold in BC, can be similar. First step, get to 200,000 ounces. We have another 3.5 million ounces in the measured and indicated category that would basically be the second mine, and I think that sets the stage for us to go from 5,000 tons a day to 7,500 to 11,000, and that would be 400,000 to 500,000 ounces a year if we were able to achieve that. So it's that's looking into the future, but that resource is already defined. And then we've averaged about 1.5 million ounces for every 100 meters we went down. So about 330 feet, we've generated another 1.5 million ounces. We've drill tested it down to 1,000 meters or 3,000 feet. We get the same results all the way down, but we didn't do enough drilling to be able to qualify the resource. But if the ounces per vertical meter stays the same, we've got a significant resource that's about 3 times what we see right now in the main 4.4 kilometers. We've got another 10 kilometers of strike length beside us that we've done enough drilling to know that it looks very similar to the deposit we're in now. And it continues, and we've averaged 1.2 million ounces for every kilometer that we've gone along the trend, down to 350. So this is a very big system. We're at the very beginning of it. The geology is a little bit complicated for some people. It's a sediment-hosted vein corridor system, so we're basically in the show me part of the story. We need to get underground. We need to show it to everybody. That's where we are now. So I think we have a lot of catalysts here in the next sort of 2 to 7 weeks. As we get the underground opened up, we complete the project financing, and we continue to do the infill drilling and underground to really validate the great assumptions that we have in the feasibility study. The other thing we've done, and we've de-risked the project quite a bit, we bought our own milling equipment about 5 years ago. It was a used equipment, new used equipment that was supposed to go to Lalor for Hut Bay. They never built the mill, so we brought all the new equipment from that for 9 cents on the dollar. It's sitting on site now. So it saved us about $100 million Canadian. And we're in process. We have an 18-month to 19-month construction for the mill. Now we have 24 months of construction for the underground. So we'll see first gold production in 2027, and full year would be 2028 at about 200,000 ounces a year for the first 5 years, based on only the reserves, not counting the much larger resource that we've drilled. This project is located on grid power in BC, so we get grid power from BC Hydro at about 6.7 cents a kilowatt hour, and that power contract is signed well. So we have permit, power, First Nations agreements, milling equipment on hand, and an updated feasibility study.
And the milestones for the next year are mostly drilling, and then after that?
Underground development is the number one milestone. We got 30 kilometers of underground development. We got the mill construction. Project financing, hopefully we'll finish that over the course of the summer. And we should be actively giving you updates. We want to start drilling the rest of the extension and the at-depth stuff as well. So hopefully we'll be adding ounces, and we'll also be doing some infill drilling to convert the measured and indicated and inferred ounces that are near the existing reserves. We'll be converting those ounces as well.
Don't forget to sign up for a free portfolio review with one of our endorsed investment partners at wealthion.com/free. With markets hitting all-time highs, now is a great time to stress test your strategy and be prepared for what comes next. Thank you all for watching. We'll see you again next time.